Hey everybody. Buenos dias, senor. Welcome everybody. We got Don, we got Edward, Diane, Will, Donald, Francois, Kimberly, my favorite subscriber, Aki, Jason, Svenborn. Glad to have everybody. Light crowd, but it is a holiday here in the United States. Labor Day. So if you're watching later, happy Labor Day to you. Happy Labor Day, Major John. Good to see you, sir. JB, Douglas, John, we've been missing you lately, my man. And welcome everybody. So I guess without further ado, maybe we should hit the disclaimer before we talk about this right here. Maybe. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation here intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, or treasuries. If you trade them, you might lose. If you lose, it's not take personal responsibility, all right? Just because somebody on YouTube says, hey, buy. You made the choice. You pushed the buttons. You got to know when to sell. So you might sell into a loss, or you might sell first and then buy with a loss. So be careful. And if you need somebody to help you push the buttons, tell you what to do, hire and consult a financial advisor. It's not me. Don't play one on YouTube. Don't pretend to do that. Right here. And you can say, well, there's several people that buy stuff from me, and they're like, I bought blah, 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 blah. It should be on you when I take a loss. And it's like, come on now. Come on. I'm just a guy putting out some trade alerts and what I do. High probability stuff, but sometimes it don't work. Right there. First day of September. This is the third month of the third quarter. We're gonna wrap this puppy up pretty quick here. We're gonna be on to the fourth quarter. Halloween, Thanksgiving, Christmas here in the United States. It's gonna wrap up pretty quick. So that's what we got cooking. First week, right there. Not a lot this week. We'll get the big jobs report probably Friday. We'll see. Do we revise that? Do we get a big jobs miss again this week like we had last month with the new BLS head person in charge? Big negative revision again. We'll see. I don't know. This unemployment rate climbing to 8.1% for new college graduate type people. It's at 18 to 24 range. That doesn't sound too good. It doesn't sound too good on the low end. That keeps climbing. Could be into more problems. Crypto is what we're here for today. So this thing hit the roadmap line right there. And we had that low. I said, this little bounce, it'd be a shame to come all this way down here. All this way down here and not go ahead and hit. Well, that's what we did right there. That was on Friday. We tagged it. Saturday, spent the day kind of churning. Yesterday, spent the day kind of churning. Today, a little bit more volatile. Dipped a little lower. Already been down a little bit lower. Bigger range today. More volatility. Man, that's kind of wild right there. Kind of wild. So we've got a lot of people buying. When I say a lot of people, I mean a lot of companies kind of buying. In fact, the Bitcoin treasuries are ramping up like crazy. This is just bitcointreasuries.net. I've shown this off before. They've changed the website quite a bit. Put a lot of it behind the paywall, which is lame. But there's getting to be a bunch of public companies buying Bitcoin. But this is still just a drop in the bucket compared to how much Bitcoin is held by private individuals. 71% of all the Bitcoin held by private wallets at this point. About 5% is locked up in Satoshi's wallet. About 5% is unmined and will be mined out over the next 150 years or so before it's all publicly out there. If you didn't know, there's only going to be 21 million coins. Lots of people have said, hey, what if they just change the code? There's not a they. It's we. Everybody would have to agree that we're changing the code. Probably not happening. Taproot took like 18 months to happen. And that was so we could do inscriptions on coins. And it took like 18 months to convince enough people that run the Bitcoin software to upgrade to that Taproot so that it would deploy. I don't know. I don't think we're ever changing the cap. I don't think anybody's going to want to change the cap. I think we want to keep it at 21 million. The demand for coins right now from these treasury companies, roughly 1,400 coins a day is what they're soaking up on average. This doesn't even count Bitcoin ETFs. The Bitcoin ETFs soak up about 1,400 coins a day on average. The mining only generates about 450 coins a day. So new coins hitting the market every day. Remember, there's about 5% left to mine out. So we go look at it. There's not like a lot of coins left to mine. Yeah, we've got 21 million cap, and we're just shy of 20 million right now. Everybody's like, well, can't that happen fast? No, it's algorithmically limited to about 450 coins a day. Every 2 weeks, if we're mining faster than that rate, it makes it more difficult to mine and slows it back down. So algorithmically, it's locked into about 1 mining block every 10 minutes. And it's kind of limited that way. This website right there, just click on the button instead of typing it in. Mempool.space, if you want to see the blocks as they happen. There's a block just happened. And we're running ahead. Having right now, the next halving block set up to be April 11th, 2028. The next difficulty adjustment in about 3 days. Like I said, we're running 76 blocks ahead of schedule. It'll make it more difficult and slow it back down. On the halving events, we're 34% of the way to the next halving. We got about 2 years, 223 days. This is all algorithmically programmed into Bitcoin. If you didn't know how it works, well, I've done lots of these crypto specials and really dove into it, how it works. And you're like, does this apply to all the other cryptos? No. This is Bitcoin and Bitcoin only. If you're trying to figure out how all of crypto works, it's all different. And there are 20.4 million cryptos right now. You're like, if you have a trouble keeping up with stocks, and you're like, well, I just want to simplify things by going to crypto, that's not going to work for you. There's no centralized exchange. There are 854 exchanges. Not a single one has 20 million cryptos listed on it. Not a single one. The market cap of all crypto right now, running at about 3.79 trillion. You jump over and look at this. Just the market cap of gold, 23 trillion. Look at the market cap of all public companies, roughly $130 trillion worldwide. And crypto, this estimates crypto 3.7. So there's no centralized exchange. So there's no centralized body that tells that puts out a number. So everybody's kind of estimates are different. Another interesting fact, ETFs listed in the United States on the US stock exchanges. Now there's more ETFs listed than there are public companies listed in the United States as of a couple weeks ago. ETFs have $13 trillion tied up in them right there. That includes crypto ETFs. So that's kind of interesting, I feel like. So all of crypto, basically 3.7 trillion. Gold, almost 24 trillion. So when you look at it, Bitcoin's smaller than silver. Can crypto grow bigger than gold? I don't know. Like it's going to be the age-old debate, right? Law of big numbers. I've talked about this, how when things get big, it takes a lot of money to double. It's like for Bitcoin to go from 100 to 200,000, we got to pull in $2.1 trillion. All right, remember, back to that 71% is tied up in private wallets, not counting Satoshis. Private wallets have 71%. If this were to double, how many of those want to sell? If we just added 50% more, how many of those want to sell? How many people are willing to sell and lock in their gains? More supply suppresses price. Price goes down, makes it harder to go up. So not only do we have to have more money flowing in, we've got people that are willing to book profits. They've ridden up from $100. Been in it for a long time. Maybe like, well, nobody bought at 100. Yeah, people bought at 100. They've been sitting on the coins for a long time. There's places that map out how long some of the coins have been held. The majority of coins have been held longer than 2 years out of that 71%. High percentage, like 80, 90% have been held longer than 2 years. That makes the liquid supply low, and we're seeing the supply on exchanges dwindle. You can look at, Bitcoin treasuries, how much coins do they have, public companies, ETFs. ETFs have got 1.4 million Bitcoins, public companies coming up on 1 million coins. Strategy has the top slot up here. Used to be MicroStrategy. Their name now Strategy. Their goal is to hit 1 million coins by the end of 2025. Mora right here. Their goal to be more like Strategy. Their stock price has not been treated that way. Not been treated that way at all. You can see Trump Media, DJT, coming in here with 15,000 coins. So very quickly, the number of coins held drops down quite a bit. If you consider each coin's like $100,000, it's to be quite a bit of money tied up right here. Strategy doesn't plan on selling. So they've got almost, they're getting, as they get to 1 million coins, they'll have to have a little over 1 million coins to have 5% of all the Bitcoin just themselves. We look at entities holding Bitcoins, exchanges have gotten to be pretty low. Got ETFs, got public companies, you got governments holding Bitcoins. This is the number of entities right here. So this public companies thing is growing. It's only 179 though. Also interesting, I was looking at a fund manager survey. When they put out the fund manager survey, they asked big funds, how many of you have exposure to crypto? People that trade crypto, that we're so into this echo chamber that we think it's pretty saturated, blah blah blah. Only 7% of big, large money manager funds have any exposure to crypto, including ETFs, crypto direct, anything like that. Only 7%. At least 93% unexposed to crypto. So we all feel like if you traded crypto, you've been in this, you're like, oh man, this is like, it's getting to be super saturated. We're just scratching the surface of the age of adoption. It seems like everybody's got crypto these days. Not really. Not really. We, only 7%. That's not really even like a tipping point for adoption. Now, the thing is, we might go through a pullback. That's kind of what we've seen every time. Every 4 years, we get this cycle. In case you haven't seen it before. Every 4 years, we have this halving cycle, and we get a big pullback. And when you look at it on a monthly chart, you don't even see it. Or on a 12-month chart. If we go to a 1-month chart, we start seeing it. Now, a lot of people have been saying this time's different. We got, more and more people getting in. And I don't think this time's any different. I think we're going to pull back again. Could be as low as 40,000. Then we'll go up again. It's just, you can see it right in the, run up, pull back, run up, pull back, run up, pull back, run up, pull back, run up. What do you expect? Pull back. So we're near the end of this cycle. We're in the run-up phase. I have a target on up here, a little higher. Actually 170, 150 to 170. That's my target. I feel like if we hit that, probably setting up to pull back. Now, I know the chart's busy. JT, I can't see. Can you just make it so we can see a little better? Yeah, sure. Let's go to a clean chart. Pull that back up to a month. I need to go to the all-time history. It's only been around 16 years. So we get this pullback. Like, how big are these pullbacks that you talk about? Right there, that's 95%. Didn't look like much, but that was 95% pullback. Yikes. How about this one? 85%, 86% pullback. About the same, slightly smaller, but about the same size. How about this pullback? Oop, clicked the wrong button. $82 pullback. How about that one? 78%. They're getting smaller. Now, what's interesting, we run the fib line from the high to the low. We got a big expansion that time. Went to the 272. That was before the first halving. And then we had the first halving. Then we got the next pullback. I didn't quite click on that because they ran up higher. Hit the 272 again. Interesting. So the first two runs hit the 272. Then we had another pullback. Then we stopped at the 1618. Didn't make it to the 272 that time. Pulled back. And so far we've only made it to the 1272. That 1618 this time. On this expansion, sitting just above us at that 150 to 170 area. I don't have it perfectly latched onto the targets. But then, what if we get another 60-70% pullback, right? What happens? Let's just put that back up there for a moment. So if we actually hit the 1618, like we've hit every time before, we might stop short. It's possible. Let's say we got a slightly smaller pullback. 75%. Goes back down to 40,000. Is the reality, all right? The reality of the situation, we're likely to do yet another pullback. Does it have to happen? No. Is it likely based on the history of doing this? It did it even before a halving event. 1, 2, 3, 4. Highly likely. Now this is on a log scale to make it look proportional. Otherwise, the exponential rise of Bitcoin makes this look ridiculous. But everybody see this? I mean, this is not rocket science. I mean, I'm sure that a lot of you that follow me and be, a lot of the channel members, you've heard me say this ad nauseum. Like, we're closer to the end of this. Like, this run, this was the time to buy. If you're getting in now, you've got this left before we potentially do that. So be very, very careful getting in right now. Now, there's opportunities inside crypto right now. There's some things that might explode higher. We could talk about a few of those. There's some stuff that looks absolutely horrible. A lot of stuff that looks absolutely horrible. Hey, look, I mean, just stay high time frame. No reason to dive into the low. Look at this. Bitcoin's out here, all-time highs. This thing going down, lower highs. Not participating at all. Even this one. It's not like all the rage, but I knew that sneeze was coming. You'd be like, well, right now it's in kind of an uptrend, but we're not out here at all-time highs. This one, just now. And this one's got me very concerned here. Like, we have this opportunity to break on out, but this kind of did a three-wave move, which, if you come on the show much, A would be here, B here, C here. That's an ABC. This potentially a bigger A. Conclude the bigger B. You know what comes next. Potential bigger C right there. Very cautious here. Maybe like, well, that first move down looks like ABC, and this the problem here. The problem is that was all kind of corrective. And then we got the swift retrace right here. Went pretty deep. Wasn't really 5 up, at least. Maybe it could be 5 up, but it doesn't. I mean, this really nasty price action in there. Swift retrace. Maybe that was a wave 2. Maybe we're working on wave 3. Maybe it's just a C. So if it is a wave 2, this is the opportunity. If that was a wave 2, this thing could pop up here. If it's just an ABC, we could pop here, still new all-time highs, and then crush this baby back down under 900. That's the risk we have going on right here. So in the very micro, we have a setup to go higher. Yeah, this looks pretty solid. Breaking higher. So pick your battles, be careful. This would be the spot I would look for taking profit potentially, or at least locking it in. This would be the holy moly, we got lucky level right there. This is the number 2 dog right here. We go look at these. You got the number 1 dog. Remember, all of crypto is only like $3.7 trillion. 2.1 of it right there. 0.5 of it right there. So that's 2.6, almost 2.7. I guess right around 2.7 trillion dollars out of the 3.7. That leaves the other 20 million cryptos is about $1 trillion. There's 0.1, 0.2, 0.3, 0.4, 0.5. 0.6. So now we're down to 4.4, basically $400 billion. 400 billion are left below the top 12. Do another 6, 7, 8, 9, 10. Below the top 20, 300 billion. A lot of people don't think about this. Like, once you get out of the top 10, you've lost most of the value. Like, there's just not a lot of money playing around down here. You'd be like, well, $2 billion is quite a bit of money. Not compared to $2 trillion. Now, law of big numbers, these are hard to go higher. But also in investing, when high prices, lots of money attracts higher prices and more money. Right? Economics, high prices bring lower demand. Stock market, higher prices bring higher demand. More people. Until we get to the breaking point. As long as prices are going higher, demand goes higher. Prices going lower in the stock market, demand goes lower. It's opposite the economy. All right? That's opposite the economy. Now, Trump Media announcing a deal with Crypto.com. This is their coin right here. They're creating they're taking one of the SPACs, which is special purpose acquisition company. They're taking one of the SPACs and they're going to do this partnership deal where Crypto.com buys DJT stock, DJT buys some Crow, and sets up the SPAC to be a Crow treasury. The first crypto, this used to be Crypto.com coin. They renamed it to Kronos coin. It's Crypto.com's coin, basically. And this new treasury going to buy $6.5 billion. $6.5 billion of Crow. The entirety of Crow right now, and it's up 72%. Entirety of Crow right here, $9 billion. Basically, they were going to put, before the pop, they're going to put that entire market cap worth of money into it. Do like the Bitcoin treasuries, but here's the crux of the issue. There's only 33% of the supply, and Crypto.com controls the supply. So this is not like Bitcoin at all. The risk here, dilution, inflation. This is when you dilute a currency, it's inflationary. And this is the problem that really Doge has, is there's no supply cap. They keep putting out 10,000 coins every few minutes, and that's inflationary and causes the price to go down. Same with SHIB, except on a crazier expulsion rate. Like they put out bajillions of these coins, even though it says a max supply. They've dumped bajillions of these coins out there. Makes it very difficult for the price to go higher. So you got to be like, this is one of those things like you can kind of go one of two ways. You can have a fixed supply, or you can have an unlimited supply. And interesting, the top two coins are polar opposites here. Bitcoin's fixed supply, Ethereum is not. And they've changed Ethereum several times to try to make it more deflationary. But you can see that max supply right here, infinity. It's one of those things. You buy a coin that can have infinite supply. It's just like US dollars, right? You look at the history of the US dollar since the 1950s, we've lost like 95% of the buying power. What do you think Ethereum does as that supply goes up? Circulating supply goes up. Prices, buying power goes down. Now, the real question, though, if it's priced in US dollars, do they inflate the supply at the same rate as the dollar? A faster rate than the dollar? Same rate, faster rate, or a slower rate? Or do they actually cut some of the supply? Like they have a mechanism in here for burning coins. It goes through these inflationary cycles where we're actually making more Ethereum than we're burning, and deflationary cycles where we're burning more than we're creating. And they can just change it on a whim. When I say they, this is actually controlled by a committee. Has centralized control. Like, well, I thought crypto doesn't have centralized control. That's the thing. With 20 million coins, sometimes there's centralized control, sometimes there's not. But Ethereum has a sort of centralized control. They have this like committee that votes on what happens. And there's one guy. His name. Oh, cool. My drawing tool is not working. Vitalik Buterin, this guy, pretty much whatever he wants to happen with Ethereum is what happens with Ethereum. This guy right here. If he wants to change the supply, they change the supply. If he wants to change the code, they change the code. He kind of drives it right here. Now, Bitcoin, not that way. There's nobody with that kind of power with Bitcoin. And there is a core group that tries to push Bitcoin certain ways, but the rest of us have to vote on it by running the new software, or, adopting the new software. So it's unlikely to go anywhere. We have the founders, but there's no like control. Maybe like, well, what if one of these companies buys up all the Bitcoin? Won't they have control? They still don't have control. That's the difference here. Even if they took up all the Bitcoin, they still can't really control what happens on the network. So it's kind of wild when you think about it. And a lot of these other coins, as for years I've said, a lot of these other coins, they try to be like Bitcoin, but make it better. I don't know that you can make it better. Like, there's a lot of things that have been solved here. Now, there are some problems, like the throughput. when you have a block of transactions happen every 10 minutes, if you try to go to the store and, you don't want to wait 10 minutes for the next block to go through before your payment goes through. Right? So that's a problem for adopting it as a method of payment, at least on a day-to-day basis. But I don't think that was ever the true intention. Now, we do have solutions for that, like Lightning. But Lightning, again, is a weird thing in itself. I've tried to use Lightning and had dozens of transactions fail. So it's not like it's a foolproof, easy system. And it's not instant either, despite all the claims. So there's been some solutions attempted to be built on top. Here's the Lightning network right here. You can see it's not very... There's some density in here, but there's some nodes out here that don't have much connection. There's only 41,000 channels. About 17,000 nodes connected with 41,000 connections. The capacity on this network right now is only 4,000 Bitcoins. Amazon has a lot of the capacity. Arguably the biggest chunk of capacity. So I've tried to do transactions on here, and sometimes it's tough. Sometimes they fail. So if you want to run your own node, you can. You put up some Bitcoin and load up your own node and verify transactions. You get a small cut based on the Lightning Network, but you have to rebalance every so often. So Amazon manages about 337 nodes, about 1.5 thousand, 1,500 Bitcoins roughly. And that's the payment solution they've come up with for making Bitcoin transact faster. But that's, when you look at when you look at it, 4,000 Bitcoins, you come back and look at how many Bitcoins there are, well, that's not a lot. 120 million Ethers, that's a lot more liquid supply. But then we have stablecoins coming in as the third here. And these are highly liquid. They just issue more. I've had people argue with me about this fact. We're changing the conversation here to a whole different type of crypto here. Stablecoins, in the beginning, you bring $1 to Tether, the other competitor, USDC, that's Circle. You bring $1 to one of these stablecoin companies, and 99% of all the stablecoins are in the United States. So you bring a US dollar to them. They accept your US dollar and give you one stablecoin. 1 for 1. You can take that stablecoin and transact it with whoever you want to, wherever you want to. And it's worth basically $1. It's pegged to $1. Now, it has decoupled in the past. We've seen that happen on both of these. Both Tether and USDC have decoupled from $1. You see it's slightly off of $1 at the moment. Slightly off $1. And then comes right back. There's arbitrage that happens. But we've seen it make a big diversion. Like 20, 30 cents diversion. And then come back. So people bring $1 to it. And they issue. Now, the Genius Act that we passed, I created a little video about it a couple weeks ago. The Genius Act we passed in July here in the United States, it signed into law, requires stablecoin issuers to buy treasuries worth the amount of money that they have in issued stablecoins. 168 billion at this point. 71 billion. Now, they want short-term treasuries, not long-term treasuries. They don't want you to buy something that's like 10 years. They don't even want you to buy something that's 2 years. They want you to buy a short-term treasury that's considered liquid. Those treasuries pay percent interest, right? If you ever bought a treasury, they pay you a percent interest. Now, when you get that payment, when your treasury comes to fruition, cash it in, you get your principal back, you get your interest payment. Now, all of a sudden, they have more money than they took in. The Genius Act doesn't let you pay a dividend to the holder of the coins. They cannot pay a dividend to the holder of the coins. But what can they do? They can take that money that they just issued and create more stablecoins. You'd be like, well, it has to be one for one. Yeah. Yes and no. I mean, you can create more stablecoins, but then what do you do with them? You could take them and pay employees. You can take them and invest in something. All of a sudden, that goes out into the supply. That's inflationary. This artificially inflates the supply of US dollars beyond somebody just bringing you a dollar and putting it in. Hey, morning, Sledge. Now, I've had people argue with me that there's no way, like, to get a Tether, you have to bring a dollar to Tether. But what if the dollar comes from the treasuries they bought, the interest, and they being Tether, go ahead and creates more Tether from the interest. That was a dollar that was brought in and put into them. Now Tether has that more Tether on their books, and they can use it and spend it and do stuff with it and put it out into the supply. Yes, it is backed by a dollar, but it's a dollar that didn't get brought to Tether. It was a dollar that came from the treasuries. This inflates the money supply of US dollars. Goes directly into the M2. And right now, we're only talking about, it's not a big amount right now. We're only talking about $200 billion. Only $200 billion. Out of 22 trillion. And right now it's just a 0.2. But what if it starts being bigger? What if it gets to $1 trillion? Then it starts being 5% of the money supply. Getting closer. Gotta be more like 1.5 trillion. But as those stable coins increase in popularity, can drive the money supply higher artificially beyond the control of the Federal Reserve or the Treasury Department. Now, some say that this cements, since 99% of stablecoins are US dollar denominated, this cements US dollar as the world reserve currency as the rest of the world adopts stablecoin usage. It's kind of interesting when you dive down into it. Now, Tether, not a public company. Can't go see their numbers. They're wildly profitable, according to the reports they put out. It is centralized control. You know, USDT does not have its own blockchain, so it's not really a blockchain-based coin. Instead, it operates on a second layer token of other crypto. So they actually operate on several other coins and their networks. They run on top of Bitcoin, Ethereum, so they're secured by all these other networks right here. So that's kind of interesting. But this does have a centralized control. It is controlled by a company. A lot of money tied up in this, but $168 billion in US dollars. As it grows, so grows crypto. USDC, controlled by Circle. This is a public company. Pegged to a dollar, blah, blah, blah. You can read about these. So this is managed by Circle. And you can see Circle went a little crazy. Apparently, they got screwed on the IPO. Could have gotten a much higher price, because it immediately went from 70, the IPO price, to 200. So the underwriter kind of screwed Circle. They're looking at doing another secondary offering at a higher price, pull in more money. Going to push it back down probably. I mean, they only went public like 3 months back, and they're already looking at doing a secondary offering. That's kind of crazy. Kind of crazy when you think about it. Now, also crazy, Tether wildly profitable. Circle wildly not profitable. See those numbers right there. Lost a bunch of money. In a business where people give you the dollars, you go buy treasuries and make the interest. Yet they've been wildly unprofitable. That's a risk right there. If their costs remain like this, where their earnings are negative, this can blow out this sucker. Their costs of running their network are exceeding their revenue from those treasuries. One reason why they went public, try to pull in some money to try to get this thing remain solvent right here. So if they go, think about it, if they go bust, what happens to the coins? What if the money's not there? And they need to invest in the 50K challenge. Yeah, I mean, they need to start generating some money. So if they go bust, that's a problem, right? Especially if they've got US dollars tied up in this and money supply. This is a risk. These are private companies. That's a risk. $71 billion risk to the M2 money supply. This is one reason. It's a reason I feel like that they justified passing the Genius Act requiring the money to be there one for one. For the coins. But what if the liabilities, what if the liabilities start eating into the one-to-one? remember, they can get they can get that interest off those treasuries and create more coins. They've got the cash for it. They just got the cash. They created the more coins, and then they use those coins to spend. Inflated the money supply, inflated the money. Yeah, sure, it's 1-to-1 there, but when the liability, I mean, what stops them from just printing some more USDC and then closing up shop? They close up shop. This thing's not autonomous. It's run by a company. It can blow out. That's a risk. Risk to the money supply. And a lot of people don't think about this, but Tether and USDC and the other stablecoin issuers do have risk to the money supply. There's another one right there. There's lots of stablecoins. They have lots of money tied up in them. Some of them are more stable than others. See, this is a big risk, I feel like. Look how much. There's not a lot of. Doesn't go big money off, but occasionally we do kind of unpeg. We've unpegged pretty hugely in the past. Tether's a lot more stable more recently. USDC, they've had a more sullied past, I guess you might say. Bigger diversions. Anytime they've unpegged in the past, it's been an opportunity to cash in. But what if everybody wants to dump their USDC all of a sudden because USDC is insolvent? They're not going to be able to. They're going to have to shut down the network. All of a sudden, it's a run. It's like a bank run, right? Are the dollars there to cash in? There's no FDIC insurance on USDC. They don't pay a dividend on SDC or USDC. They can't. That's kind of interesting. I feel like that these can be inflationary, and people just don't. I don't know. Maybe I'm a unique visionary on this, but I see these as potentially causing a problem as they get bigger and bigger. And 99% of them are US dollar based, pegged to USD. US dollars, Uncle Sam dollars. Now we look at the top trending coins. Solana in here. It's another network. This right here, this network, arguably responsible for most of the 20 million coins. Once they created their level 2 network. So you've got, take a step back. We've got level 1 coins, high level coins, the base coins. Those base coins, these are base level coins. Other coins can be built on top of them. There's some other ones. Just look at the top few here. Yeah, there's more down in here, but these are kind of the top 4 base coins right now. It's XRP, kind of a base coin, but there's not really a bunch of coins built on top of XRP. You can see they're called networks. Now, when you have a network, other coins can be created on top of those. When Solana created the ability for what we call layer 2 coins to be built on top of Solana, and this is where Ethereum back 4 years ago was going crazy with all the NFTs and stuff, because NFTs were all only able to be built on top of Ethereum. So Ethereum was going crazy. Demand for Ethereum going crazy because demand for NFTs going crazy. And the mining was super profitable when you mined Ethereum, because you were not only verifying Ethereum, you're verifying all the layer 2 stuff, NFTs, and all those other transactions. And the gas fees, what they called gas fees, which was the amount of Ethereum you paid to get a transaction approved, were sky high and going higher. So they fixed it by doing away with traditional mining. This used to be a proof of work, like you had to solve a complicated math problem, proof of work, just like you do Bitcoin. You have to solve a complicated math problem to verify a block. You used to do that for Ethereum. Then they changed it to proof of stake, where you just hold some coins to verify the network. Not quite the same. Now, that reduced the gas fees, but at kind of simultaneously, we were going through crypto winter, and some other coins like Solana developed an even cheaper way to create level 2 coins, layer 2 coins, than Ethereum. This became dirt cheap. You can, for a very low barrier to entry, you can create a layer 2 Solana coin. And what that did, it created the explosion of the number of cryptos. Veritable explosion. This back here, I don't remember what that was. That's like when, I think that's when Solana popped on. But you can see right down here, just the past year, we had Ethereum, the market share of new coins start getting eaten up by this Solana block right here. More than 50% of the new coins are on Solana. Base coming on the scene. They've been there, but we're growing. Create an easy way to create new coins. BSC was in here. That market share dropping. So Solana was the big, Solana created a very low barrier to entry for new coins. You can see the ramp here. Slowed it down a little bit, but there was a giant ramp of new coins being created on Solana. It's like the explosion. And look at the all-time history. You can see, as Solana popped on, Ethereum was the big dog back here. 2015, it was the only place you could make a level 2 coin. Coming into 2020, it was still controlling about 50% of the market. And then we had other coins like BSC coming in and taking their, taking up some of that. Right there. Solana came in the scene, made it even cheaper, and ate 60% right in here. You can see that Ethereum, it's like, why is Ethereum network, like, it's dwindled down to barely a little piece. Barely a little piece. They let them, arguably, when they went from proof of work to proof of stake, they let other coins in the door, and they lost their market share. They haven't been able to recover, and they're probably not ever going to recover. Everybody's moved on. Cheaper, easier place to transact. And this is new coins by day, basically. It's crazy. Coins per day. Look at that. Kind of peaked at almost 200,000 coins a day. New coins a day. Just in the past year. New coins a day. 38,000 new coins a day. How could any, what would we use 38,000 new coins a day? I mean, I don't even know anybody that could look at 38,000 new coins a day. Absolute insanity right there. When we have derivatives of crypto, you got to be careful. It ramps up the volume of crypto that's available, the exposure. There's brokers, we live in the United States. We think about, nobody lets us trade leverage crypto, but most of the rest of the world lets you trade up to 100x leverage on crypto. Like you could have, think about it. You can, for $1,000, you can control one entire Bitcoin with 1,000x leverage. Termite Chainlab coin. So we could make a Termite Chainlab coin. Let y'all invest in it. But that's where these level 2s come from. And you can kind of pop in here and look at the DEX, which is DeFi Exchange, and see which networks have popular coins. BSC, Binance Coin, Base. When BSC had an explosion of coins, that was all Binance coins. And these are basically the base level coins here. You have Ethereum, Solana, Base, BSC, Vector, Aperturum, Peak, Arbitrum, Avalanche, SUI, Tron, Polygon. The list goes on. Or these are all the base level coins that have other coins built on top of them. Some are popular, some are not. Some have liquidity, some do not. Once you get outside the top 10, it's kind of wild. I've already been talking for an hour, so you can keep hanging out with me. I'll keep going through some stuff. But Avalanche, the Fed was using Avalanche, but then Fed now kind of got shut down, and Avalanche kind of took a bath. Doesn't look like it's going anywhere. Bitcoin Cash, it's an interesting one. It's basically Bitcoin before a fork. Look at a fork is when they change the code. It creates a fork. So you've got almost the same supply and demand metrics. And interestingly enough, the mining on this stays relative to the mining on this. The same algorithm mines both coins. This being only $500, you have a fraction of the miners participate in Bitcoin Cash, but as Bitcoin takes a dip and competition ramps up and the payouts per coin, per mining, per miner running to mine the coin, as that drops on Bitcoin, we see it, and it spikes on Bitcoin Cash. We see miners move over and mine Bitcoin Cash. Or at least I see that. So it's kind of interesting. And Litecoin is tied to Doge. Like when you mine Litecoin, you mine Doge. Some interesting kind of market dynamics that play out in here. One that is looked at as a new up-and-comer, potentially Hyperliquid. For a base coin. Now, the thing that puts out red warning lights for me is the supply that's out there compared to the undistributed supply. Nice uptrending chart. We're near all-time highs. Total supply. It's got 1 billion hype coins circulating supply. Only about a third of them. So somebody's sitting on 2/3 of the supply. That can be inflationary. Grab the, go with Binance. They're the biggest. You know, look at Hype USD. That doesn't look like Bitcoin or Ethereum's chart. Do we have Bybit? I was looking for, it's a perpetual contract. See, there's different exchanges, so you can pull up the pricing off all these different exchanges and kind of see the history. So all these are different exchange pairs for Hyperliquid. Like, well, where's the all-time history? Yeah, that's the thing. There is no single place to get all-time history, and these pricing will be different in every exchange because there's no centralized control. This gets to be very difficult. So look at the Hyperliquid Tether on KuCoin. It's obviously had it listed longer than Binance. I'm not sure what that spike was, so I'm just going to ignore it for the moment. You look at this pullback, 1, 2, 3, and we've expanded, and we're sitting here tagging the 1272. There's potential this to come on up right here. This is an interesting opportunity. Potential 80% upside. One of the big influential people inside the crypto realm thinks this may be good for a run to 600. I don't know. The chart doesn't really support that at this point. We'd have to do another pullback before we get that kind of run out of here. But I thought it was interesting. Could be good for a run to 80, which is almost a double. Right there. Opportunity. I said I'd talk about some opportunities before we wrapped up here today. Now, Ethereum. In the smaller time frame, like I talked about. We have to go even smaller. This has a potential 5 up. 3-wave retrace. A, B, C, kind of truncated. Went a little deeper than I would have liked to see. So here's the opportunity. If in fact we can hold this area, turn back higher, break above here, this could see an outsized move higher. Could. Doesn't have to. Thanks for hanging out. This be an opportunity. If this plays out, and we break it back above 4,600, the upside potential, 5,800. The stop right now, right here, around 4,200. So you could get in now, 43, 4 or 4,400. And today with just crypto, or you can wait till tomorrow, and you can pick up some like ETH A, which is BlackRock's Ethereum. If you wanted to go with leverage, you could go ETH U or ETH T for 2x leverage. You could play options on this. How much time? That's a big question. I sold puts on ETHA. If I got put the shares, try to catch the upside, but keeping in mind this stop down here, 4,200. If we break below that, the party's over. The trade didn't work. So be careful. Now, if we break above here, here's the upside potential, 5,800. So percentage-wise, 44, 58. Not giant numbers, but 33% upside. 33% upside. Let's keep that in mind for a moment. Go to ETHA. What's a 33% upside get us? This is just BlackRock's. This is kind of like IBIT, just for Ethereum. 33% upside. This would be 1-to-1 basically. So we've been looking at a move up to around about a $10 move, basically up to about 43 from 33 to 43. 33% roughly. Now you can play options with that. It could be highly profitable with some options. The options fairly liquid, but the IV is pretty nuts on this one too. And right now 120% IV in the short term. That means they're pricing, 120% move. Think about that. Pricing in a move, the double priced into the options with 120%. Now, how long? I don't know. That's the thing. Like, it could take a month, could take a week. If you're going on calls, go up to 43. But 43 is our target. So if you played 43, we'd just be getting there. They're priced at 60 cents right now. Holy bananas. So you could do something like a debit spread where you buy one, sell one higher. You buy a 33, sell like a 40, catch $7 of upside potential, lower your cost. Or you could sell puts, which is what I did. Sold puts basically at the money. 33, I think, is where I'm at. I was out of the money last week. Price came down. I rolled forward. Forward 1 week. Got paid 95 cents more. Just for 1 week exposure. It's pretty big. So now, you just look at my cost. Get collecting 90, basically I'm at a cost of 32 just for the roll. Takes my cost down right there. If you sold a 32.50, your money comes off of there. Basically, you can almost get $2, looks like. So you'd be down at $1, $2, you'd be down at 30.50 for your cost. If you got put those shares and you collected $2. And that's out to October 3rd. I only went out to September 5th with my roll and took $1, basically 95 cents extra credit for going out a week. It's just wild to me to think that much money was sitting there. I collected money on the first time. So now I'm down here below 32 with a cost if I got put shares. And I may be able to roll it in and collect even more money as we get closer to the 5th this Friday. Now, that's one way to play. Another way. You could just buy shares here, ETHU. Yes, it does take more money for shares. 33% upside, probably get you like a 60%, being conservative. Roll down just a little bit from, so if we saw that pop higher, you go from about 145 to 240. I do not recommend you play options on this. That's adding leverage on top of leverage. Very dangerous. That could be 60% upside right there, and you don't have to have the risk of trying to guess time frame. This, there's no time involved in buying shares. ETHT, a little bit lower price, $100 per share. Same 60% upside since it's a 2x. Ultra means 2x. You can see something up around 160. 60% upside right there. Hopefully that helps you see a couple ways to play on that one. Solana has an interesting price pattern going here. Now, I commonly say you can't really use anything past here, but that's for companies. All right. Perceivably, this originally was 0 because it didn't exist. Came on the scene, ramped up a little bit, pulled back down to a lower value. Now we're coming back up. 414. Kind of the upside target here. We can push this out. Preliminary target, 700. Another upside target right there. That leaves us potential 200%. So you could just buy the coin, potentially make 200%, triple your money basically. If we got to that $700, $600-700 area right there. Now, trying to remember the Solana, spell right. I'm not gonna. Oh, I left the drawing tool active. And there's a couple of these. There's a SOLZ, Solana ETF, SOLT, Solana ETF. I think there's a SOLX maybe. So this is a 2x right here. If you were to just buy shares, $23 a share. And if this actually went up to 200% on the underlying, you've been looking at a potential 400x. This potentially could go from 20 to 120. Right there. I'm just talking about ways you can stay in the regular market and potentially exploit some of these moves right here. Potential ways. All right, it's on the Toronto and Solana ETF on NASDAQ. If you just wanted to play this straight up, you could buy shares here, potentially gain the 200%. Going from 20 to 60. This one does have some options you could potentially play. Not no weeklies. You just have to play by the month. But you look at the IV priced into these, 240%. They're pricing this thing for outsized moves. Think about that, 240%. I mean, that's the options market already pricing in the 200% move, basically. So it's not like I'm the only one that sees this potential right here. Here you go. There's a couple ways to play. XRP. This one's kind of interesting. Has a low here, high here, low here, and a potential to come on up in this zone, if not up to here, if we're going to be bullish on XRP. So we've come up shy of just a bearish target, really, bearish expansion. And if we're going out to new all-time highs, we might take it on up to this 24 area. Right there. Check back in with the reality of the situation. 10x higher to take it from 163 billion to 1.6 trillion. I don't know if that seems like reality or not. It's possible. I don't know if it's reality though. So 10x Seems a little out of the realm of what might actually happen, but if Bitcoin goes on a massive run, we could see this come up with it. It is the number 4 coin right now. You know, we could easily double. That wouldn't be too difficult. Go from 275 to 550, roughly. So we can see 200% pretty easily, or a double, 100% gain. So that'd be 550. That'd be right in the bottom of the zone right here. Doesn't even seem like much, but 100% gain. XXRP. That's a 2xer right here. If we were to see XRP go up 100%, this could go up 200%. Go from 33 to almost 100. Could be another way to play XRP. So there's a few different opportunities inside the crypto space out there right now. There's some other XRP coin stocks, ETFs available. We've got XRPT, XRPI, XRPT, XXRP, UXRP. There's some ways to play if you wanted to play different ways. ProShares, UXRP. That's on boats, though. I don't know if that's going to be a one you can play. Key is, though, crypto's more volatile than any other asset. This is the most risk on, risk off asset. If the market goes through a freak out and we're going to go down, crypto's going to go down bigger probably. Just keep it in mind. We are getting to lofty expectations on the S&P. I do hold that we're probably going to go even higher, but we could experience a bigger outsized pullback again after going to ridiculously high levels. So be careful out there. The account you save may be your own. You're in charge of managing your own risk. As with anything, substantial risk of loss involved in all trading. If you trade it, you might lose your money. Calculated risk, which means small risk, big reward. Put a little bit of money to potentially double, triple your money. This is not a go all in type of thing. You'd be like, well, other people have gone all in and made life-changing amounts of money. I don't know if they went all in or not. Just because you got in at a great time, this is back to where we started. We're near the end of this cycle. Closer to the top of this cycle than we are the bottom of the cycle. The bottom of the cycle was back here. We're closer to the top. Then we get that pullback, potentially 80%, just like we've had 5 times already. So keep it in mind. At some point, we get to the top. Are we there yet? I think we got a little bit more to go. Although a lot of the echo chamber, a lot of the crypto industry thinking we got one more to go. But again, looking at bigger picture, 93% of big money funds out there don't have any exposure to crypto. So keep it in mind when you go after some of these aggressive plays. We may be closer to the top. Have your alerts up here at Bitcoin, like 150K. We hit that 150K. Party could be over. Nobody's, the market's not going to send you a counter invite to the final move. It's not going to send you a counter invite to the pullback. It's just going to do it. So be careful. All right? Be careful. If you take a calculated risk, I always say, if you're going to play crypto, use money you would take out back, throw it in your fire pit, and light it on fire, because that's entirely what might happen in the crypto industry. They may just light your money on fire, burn it all down. It's gone. Gone, gone, gone. So be careful out there, everybody. Yeah, we're going to go. Kimberly's got some pulled pork cooking on the smoker. Have a great day. I'll be back live at noon with another crypto special update. It is a sales-based presentation. If you want to come hang out, I'll be there. It's out on all my company publisher stuff. I'll throw a link in Discord. Have a great day, everybody. We'll see you later.